Hey everybody, it is Chuck Barone on a fabulous Friday, August the 23rd, 2024. Powell Day, baby. Ooh, Jerome having, him and all the big shots having their fabulous symposium, fancy name for freeloading in a beautiful place off the taxpayers. And Powell came out and basically blew the trumpets were blaring, do 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 do, and Powell gave the market exactly what it wanted, exactly what it needed. A really, really interesting little bit of a speech he made. I got a whole bunch of notes I'm going to talk about later. And the most dovish I've ever heard a Fed chair sound. And I've heard, I've been around for a little while. I've heard several. This was like, okay, guys, basically just here's feeding it to them. There was no green Spanish, weird speak where you got to actually interpret it. Anyway, we'll go into details of all that. Before I get started, though, let me take a half a second. Welcome everybody to the show. Welcome everybody on the chat. Nice to see everybody there today. Oh, Kevin today. How you doing? Elevate, yo, touchdown, Tommy. The regular crew. Wolf, Tilla, Smoke. We're missing Salty though. I don't know where he's been the last few days. Anyway, welcome everybody to the show, and as always, thank you millions, billions, what trillions for your support. It means the world, guys. It really does. All right, markets. So Powell Day, Powell came out and told the market exactly what it wanted. Market blasted off. Everything had a good day today, pretty much, guys, except the dollar. Um, Stock market, whoosh. Check it out. Remember how bad it was yesterday, right? It was like, man, the market's going to be in a holding pattern. Well, that ended today. Dow Jones up 462 points, 41,515, 41,175 on the Dow. The Nasdaq up 258 points, 17,817 on the Nasdaq. The S&P, remember I was just saying, oh my God, at 50 points, it was down yesterday. Today, up 63. 5,634 on the S&P. Stock markets are alive and well, guys, and it looks like it's time to rally. Now, we'll see. I'm going to have to get in and do a little bit of research on what the typical market reaction is as far as gains, losses. Once the Fed starts now to change does the pivot, isn't that the word they use? Does the pivot to a rate cutting cycle now instead of rate hikes? It's going to be fascinating stuff, though, man. We got a really wild ride to the end of this year, guys. The bond market, bond yields falling. So check this out. The 10-year falls just 6 basis points, but still 6 basis points, pretty good move, down 3.80. The 2-year, which is the shorter term, of course, falls 10 basis points, 3.91%. So yesterday up, today down. Stock market up, down, up. It's crazy. It's nuts. So the bond market rallies, stock market rallies. The dollar, here's the loser for the day, down 76 basis points on the index. Yikes. 100.69 on the dollar index. I don't know if that's pricing in a half point or a quarter point. So the dollar will continue to come down, guys. Good news for gold and silver. Not so good news for U.S. citizens who pay everything in dollars. I think our friends overseas who have tons of their reserves in dollars, they are going to be a little perturbed when we try to devalue the dollar like we do. All right, metals. Gold today rallied, dollar down. Gold rallies up $25.70, right back up over 2,500. $2,511.40 for gold. Silver rallies up 83 cents, $29.87. Silver. I would have been happy today if silver would have closed 14 cents higher. How about $30.01 or even 13 cents higher, $30? Still got to break through that number. That's the big resistance. Obviously, silver having some difficulty. Gold went right back through their resistance at 2,500. Silver can't do it yet. We'll see what happens. Oil today rallies up $1.89 per barrel. Big move for oil today, but still in our target, $74.90. So we're in the range we're looking for it to be. Of course, next week, everything could change because that's the nature of the markets these days. Bitcoin today rallies up $3,310. A really good day for Bitcoin, 63,653. So nice bounce up off that. Now, when you guys have heard me tell you that once it breaks through, so Bitcoin breaks through 60,000. Now it starts to come down. It bounced right back off that 60, which is now support. Boom, 63,653 today. All right, so let's talk about St. Jerome. St. Jerome up in Jackson Hole, man. Really, wherever they do the speech, if it's not on some amazing green screen, it sure looks like a beautiful, beautiful place. Different than I was just in Casper, Wyoming, and it didn't look as pretty as Jackson Hole. But St. Jerome, big day today for not only him, but for the markets in general. St. Jerome says, quote unquote, the time has come. Wow. Okay, so like I said, there was no, what is he really trying to say with this speech at all? He said that the risks of higher inflation were diminishing on the back of a weaker labor market. Now, you guys have heard me say this a million times on the show, how the Federal Reserve considers a strong labor market inflationary. Because when there's competition for jobs, people tend to pay a little more, right? And that little bit more they're getting paid then gets spent into the economy. Now you have prices, demand, supply, demand rate going up, supply maybe not, prices are going up. Anyway, that's the way the Fed looks at things, okay? So with the weaker labor market, especially now with this massive revision, I don't even know if they really took that into consideration yet. He said, quote unquote, the time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Well, isn't that something? Now, I got to say, even yesterday, I think I said I couldn't wait to see how he was going to deliver the news. This is pretty amazing. Really, pretty amazing. So again, he gives default to the data. Okay. No, and he didn't take questions that I saw. So he was not, I would have pressed him and said, okay, well, what happens if the data conflicts? Let's just say inflation spikes up a couple bips on the CPI or the PCE or whatever you want. And at the same time, we're creating less jobs and more people are claiming unemployment. What do you do then? Now you got now comes the tightrope act, right? Because the Fed, what's their jobs? They have two mandates, they say. Really, the one mandate is what they started with. They added this other one later, but the main mandate is stable prices. So that was why, of course, inflation is not stable prices. That's why we've had this whole 2 years of higher interest rates. Now prices starting to normalize and at least not going up as fast. So they feel like they've won the war, or we won the war. Powell declares victory. He said, and it's interesting the choice of words too, the evolving outlook and the balance of risks. So when he talks about the balance of risk, what he's talking about is just what I just said. Higher inflation, lower unemployment, or lower employment. Which of those mandates is going to be the clear winner here, right? We're watching history, guys. We really are. They're going to write books about this era down the road. Not only this monetary madness, but the political madness we're in, the vision we have in the country, and everything about it. It's going to be really something to see how all this comes to a giant, massive head. He said, the cooling, quote unquote again, quote, the cooling in labor markets and labor market conditions is unmistakable, unquote. Quote again, it seems unlikely that the labor markets will be a source of elevated and fresh inflationary pressures anytime soon. Okay, so what he's saying is this was the last domino the Fed was waiting to fall. And he's saying now that it seems unlikely, meaning it's not going to happen, that the labor market will be the reason that we're having elevated inflation numbers. And that will not happen again anytime soon. So I don't know how you dial that in. Does that mean that he believes job conditions are going to continue to get worse? Unemployment numbers are going to go higher than they are? We're already up now, broke up past 4 pretty easily. Now we're at 4.3. What happens if it gets to 4.5? What happens if it gets to 4.9? Right? I mean, what happens then? So now you're going to be cutting rates faster. What happens then when inflation spikes up, which it will? I mean, there's a lot of money parked on the sidelines right now, guys. We all know that. Okay, where was I? He said, well, this was my favorite. We do not seek or welcome further cooling in labor market conditions. Okay, so that's a tell there, right? Basically, what he's saying is not only did they welcome slower job growth, but they must have been doing something to seek it, right? And of course, they felt like higher interest rates would be what would work, and guess what? It looks like they are going to. So this was really an interesting speech by Powell today. Basically, the floodgates are open, guys. I mean, depending on where the data leads us, we're going to for sure now, it looks like, in spite of the election and in the face of everything that I thought the way he would play it, looks like pretty much a for sure thing now that we're going to get this rate cut in September. We'll see where the data takes us. The reaction to that in the election cycle, right? I mean, there's just so many variables that are going to come into play right now. And with everything so weird, because, okay, it's true. You do have the jobs coming down, again, especially with that revision. But at the same time, inflation it's not at their target, guys. It's just not. CPI, I think it broke under 3%, but only by 2.9. So it's basically still a big number above 2 or 1.9 where they want it. So high wire time, baby. I can't wait to see how on earth they're going to manage all this stuff. Because here's what I see coming up. Okay, check it out. Powell has to figure out how to balance the dual mandate, jobs versus inflation. If we move toward we could have the worst of it, right? Here's where now this separates the big boys from the little boys, because if Powell misses this, Powell screws up, if Powell's off by a fraction, okay, what we end up with is called stagflation, where you have an economy getting weaker and stinking, you got unemployment rising, at the same time, you have higher elevated inflation. Yay! That's what we're looking for. So that is going to be amazing to watch. And of course, we're going to talk about that on the show pretty regularly, I'm guessing. The dollar weakening, sagging dollar will certainly not help consumers, because guess what? Every frickin' thing that we buy pretty much is imported. Employment data will get the spotlight now more than it has with inflation data. We're going to be watching every little move on that stuff. Powell walking the tightrope, guys. Now, a top economist, Jeremy Siegel, one of my guys I really like, Wharton Business School professor, usually a pretty smart guy. They're calling for the Fed to get on this. They're late, calling for a 0.5 point rate cut in September. Siegel said the neutral rate now, okay, we're at 5.35 up here. Siegel says the neutral rate now should be 2.8. Basically, what he says is now this was at when the 2-year was at 3.8. Because what he said basically is the neutral rate is about 100 basis points less than the 2-year. That's the way he described it. And he's a Wharton Business School professor, so I'm guessing he knows his stuff. He's, this is where Milken went. This is where Trump went. This is where Steve Wynn went. A lot of the smartest guys went to Wharton. So 2.8 is what Siegel sees as the neutral rate. That's really interesting to me because that really would see some pretty fat, deep Fed rate cuts coming. Okay. Let me finish my point I was trying to make yesterday when we had the barking dog attack. Treasury basically now at odds with the Federal Reserve. The Federal Reserve controls overnight short-term rates. They've been keeping those rates elevated, right? And they want to bring down long-term rates too. The Treasury now is overloading short-term bonds. And we know, you've heard me screaming bloody murder about it on this show, that they're borrowing money, hundreds of billions of dollars a week. Listen to this, guys. 70% of the Treasury is now short-term stuff. Usually it's 15 to 20% short-term, more longer term. And I guess they're betting on rates coming down. I could kind of see that would be where they would want to go, right? But I don't think they're communicating very well. I got to, again, Powell, say what you will, the guy's done a pretty fair job here. Yellen, I don't even get her at all. And last, before we go for the weekend here, you heard me complaining yesterday about the $5 footlongs are now $15 or whatever. Read an article just before I came on the show. Subway temporarily cutting the cost of their footlong subs to $6.99. So the party's over for the restaurant business guys, charging the extra money, getting the extra money now, costing them customers, costing them market share, people moving on. If you're going to spend $15, go eat at a nicer place where the waiter will bring you food. You're not going to be at a counter at Subway, right? So the cut is on. I just thought it was funny that I just talked about that yesterday, and here it was today. Subway cutting prices. It's happening everywhere in the fast food, moving into the middle food stuff. Prices starting to come down, guys. Anyway, that's it for the day. That's it for the week. It's been a bananas, crazy ass week. I'm sure we have another one coming up next week to finish this month up. Then we'll be into September. Can't wait to see what the August jobs numbers look like. We're going to get that on September the 6th. It's going to be madness, guys. Anyway, get out with this weekend. Enjoy time with your friends. Enjoy time with your family. Get yourself rejuvenated. We got another week of madness coming next week. Everybody have a great weekend. Until Monday, everybody, take care. Thanks.